Hello, everybody, and thank you for being here for Mark Deaton's presentation on the great big Bollinger Bands. He's going to be taking a look at current markets and kind of wrapping up the introductory videos that he gave you and give you some more information. Then he's going to tell you a little bit about the great program he has and the great VIP pricing. But before he does, I wanted to give you my take on Mark and why I'm was so intent on bringing him here to you. For those of you who are part of the disciplined trader family, and there are a number of you out there, can you raise your hand if you're out there? In any event, the idea is, what I wanted to say is that at the disciplined trader, we have a number of things that we talk about when we talk about mental and emotional issues. One of the main things that turns a lot of traders around from a mental and emotional standpoint is patience, developing patience and more specifically, developing patience to wait for an A trade or an A plus trade. And the question that I always get is, what is an A trade or A plus trade? And the response is it's a little bit different for everybody, but the definition is the same, but the way you get there can be different. An A trade or an A plus trade is a trade that you have had experience with before, a particular set of setups or conditions before taking a trade and executing a specific set of conditions and setups for exit strategies that you've seen work a high percentage of time or the highest percentage of time when it comes to your personal trading. Not the trade that's produced your biggest winner. That could have been a one-off thing, but the particular setup that is the most advantageous to making money, your highest probability setup. And when I bring people to you, like I'm bringing Mark to you today, one of the conditions, and Mark has satisfied this condition tremendously, is the ability to have a system that exposes A to A plus trades. And he does it through what he calls pressure points with the use of Bollinger Bands. Pressure points are points of pressure either positive or negative for the up or down as far as the price movement is concerned. And when you have a preponderance of pressures in one direction, the probability of the trade goes up. And I've seen this in my own trading, having used some of these techniques. I've seen it in others from testimonials and so on, that people who have worked with Mark. But Bollinger Bands, we know, is an effective tool to use, especially in conjunction with others, but most people misuse it. And Mark's ideas around pressure points, utilizing Bollinger Bands, is the reason that I'm so excited about Mark, because I think, and I've seen traders turn around their fortunes or misfortunes to fortunes by just paying attention to being patient to wait for the high probability trades. And when you line up your pressure points, in the case of Mark's way of doing things, you wind up with very high probability trades where a number of different forces are acting upon a chart at this moment, the price at this moment, to give you a high probability. So I'm going to step aside. I'm going to let Mark do his thing, because Mark, I think if you've seen his videos, you know that he's very clear in the way he presents, and his content is terrific. So Mark, thank you for being here. Thank you, everybody, also for being here again. Mark, take over, my friend.
Hey, thanks, Norm. I appreciate that, and I like what you said about price just now, because I call it compliance. And I'm going to touch on that in our first few slides here, just about how a part of our method, everybody should be using some sort of filter to observe and acknowledge that price is compliant. Because no matter how great your system is, there are going to be time frames, assets, vehicles that are not compliant. And I see so many times people try to make something compliant and try to make up a setup when there's nothing really there. I see that a lot, especially with beginning traders. So I'm humbled to be here. I don't know how many of you know Norm very well, but you know he's one of the big guys in the industry, one of the most well-respected, honest, forthright people to work with. He talked to me a couple of years ago about doing this with him, and it's literally taken us almost 2 years to put this together to the point that I'm actually here talking to you guys today. I'm also humbled by all the comments that I see on the videos. Tons of great comments. I get joy out of answering them. I appreciate them, and I just want to thank you guys for all your input and questions and things like that. It's been awesome. With that said, let me make sure everybody hears me clearly. Norm, am I being heard perfectly? Everybody hear me good?
You sound good.
Okay, awesome. So the first thing I want to say is Bollinger Bands, guys, is a registered trademark of John Bollinger. Without John's insight into this wonderful indicator, none of us would be here discussing it. We're going to talk a lot more about we're going to talk more than just Bollinger Bands here, but I do want to acknowledge the master who created the indicator, and he appreciates that we reference the fact that it is a registered trademark of his. Okay. With that, let's get started. So what we're going to cover here, guys, today, my name obviously is Mark Deaton. I want to thank you for attending this training. The name of today's training is How to Master Trade Direction in Any Market with Bollinger Bands. Best part is, without staring at a computer all day and without having to become an expert at it. Most of us are really part-time traders. We got jobs, we've got family, and we need somewhat of a shortcut to have a high degree of accuracy without having to do the equivalent, let's say, of a college course. So when you're done with this webinar, you're going to be able to forecast immediate price movement with incredible accuracy so that you can make more profits, cut your losses, and finally begin to enjoy the benefits of successful trading at a much higher level. I thought long and hard about what I could title this, but I think the best way to put this, guys, is How to Master Trade Direction in Any Market, okay? I'm going to use this example here. I'm going to teach you this by showing you how I put $25,825 in my pocket in 2 days in the crash last month. It's just a good example, and it really demonstrates Bollinger Bands and its ability to forecast direction for really, and I want to focus on this, kind of 1 to 3 days. My focus is always 1 to 3 days on a daily chart because anything can happen after that. I always say, and I'll probably say it a couple times in this webinar, this is what price is going to do, right, at least for now, because it can change in a bar or two. It can actually do what it wants on the same bar we're forecasting. We can always be wrong, but if we're right about price direction, we're only right at least for now. Always keep that in mind. Okay, 1 to 3 days is what we're looking for. If you prefer an intraday chart, this equals 1 to 3 bars or 14 to 21 bars respectively. So I try to look for a 1 to 3 day forecast, but I'm ultimately always searching for that 3 to 10 day, 2-week trade. Okay. So I'm going to show you how to do this, and I'm going to show you how I avoided every false signal that followed by sticking to a simple set of powerful principles. Plus, I'll be showing you the how-to behind the scenes. Okay? If this sounds good to you, then you're in the right place. So my name's Mark Deaton. I've been trading for about 15 years. I've traded everything from stock options, where ultimately that was where my heart's at. That's where I started in the beginning. I always go back to options. I love trading options. I love the complexity. But I've made a way to make it real simple for me, so it's not complex. I've traded soybean meal futures. I trade oil. I trade forex. This is me and my family and my 4 kids. That's the whole family there in the middle big son there. He's 21 now, about to be a police officer here in my town, and no longer lives with us, but lives right around the corner. And of course, the other kids live with us. It's my wife right there in the red sweater, and those are my boys I just went riding this weekend with out in the mountains in Idaho. We like to move around the mountains in Idaho. About 70 miles from us is some of the greatest country there is in this country, and we spend a lot of time out there. That's me on the left, of course. I've been featured in several books. I've got some of the most read articles on the Tycoon Report and Institute for Individual Investors. I've got #1 videos on YouTube on how to trade Bollinger Bands and several other topics. So that's about me. So here's what you're going to learn during this presentation. How to find trades that are ready to explode for a 1 to 3 day move, and how to enter them with near perfect accuracy so you can trade with more confidence. How to keep more profits from each trade without exposing yourself to more risk, and how you can start keeping what is rightfully yours. And of course, how to stack the odds in your favor so high that being right on 10 consecutive trades is commonplace. Now, I want to add something here that's very important. I don't like to say 10 consecutive trades. It kind of bothers me. But it is very possible when you do the pressure point stacking that we're going to be doing here. But what I want to tell you is this. There's a big misconception about accuracy. I've got a method that I use, for example, that allows me to be wrong 50% of the time, heck, even 70%, and I still make a killing. So accuracy is not the end all. In fact, the more accurate you are, the more likely it is that you're skipping perfectly doable trades. It all really boils down to your accuracy versus your risk. It's a ratio thing, and it's as simple as 2 plus 2. If I'm right 50% of the time and I make $100 on my winners and I lose $25 on my losers, it's a good system. I'm solid. I'm making money. If, however, and this is from experience, if I'm right 90% of the time, okay, think iron condors. If I'm right 90% of the time and I make $100 on 9 trades, but I lose $1,200 on one, it's too risky. It doesn't work. And I said it, in here. It says typical condor trade. Don't get me wrong. I love iron condors, and there's some favorable iron condors out there. But a guy that just focuses on iron condors can run into a lot of trouble with one single trade wiping out everything he's built up. So he's bragging to his friends about how he's 90% accurate, and then, boom, one trade kills everything. Not a good situation. So what we want to do, guys, we want to find a balance in this accuracy thing. It's okay to be right on 10 out of 10 trades. It's also okay to be right on 5 out of 10. It's also right to be okay on 9 out of 10 as long as the risk in the one trade isn't going to wipe out all your profits. So why is this important to you now? Most of what we're learning about trading in general and forecasting price movement is dead wrong. The stuff that's being taught today is regurgitated garbage that worked 10 years ago, but today more and more you're being trapped by market makers and other black hat institutional fat cats who are playing the other side. Their job is to trick you into trading old common technical analysis setups. I'll show you how to avoid most of these traps by stacking pressure points like Norm mentioned and gaining ultimate confluence. Every market has a cycle. My middle bullet here. Every market has a cycle of paying up, whether it's stocks, options, forex, futures, corn, silver, gold. When the paying out is over, you should be out or at least protected or flat in that market so that you're immune to a flat or falling market unless you're shorting the market. Okay? This is why an effective price-based system that relies 100% on pure raw price action is really your only ticket. Master one system, trade any market, trade the stock market, options, forex, futures, and yes, even commodities. And then number 3 here, risk. It's all really about risk, guys. And the one thing that you have 100% control over is how much you lose. Your focus should be how much you're willing to lose. And the price-based model we'll explore with Bollinger Bands will make you at least 3 times the trader you are now. So is this for you? If you're an active investor, I just want to call attention to who this is for. This might not be for everybody that's on this call today. I'd imagine you've seen most of my videos, so you guys have an interest, you know it's for you. But let me tell you who it really is for. If you're an active investor, swing trader, or even a day trader, and you want measured, improved results, this is for you. If you're tired of being wrong about direction, you want to dramatically improve your ability to forecast, this is for you. And if you have a desire to create a better retirement for yourself, and you want to do it as quickly as possible, this also is for you. Couple of house rules before I get into the presentation. This is not a get-rich-quick thing. If you're looking for get-rich-quick, you're in the wrong place. This is not a black box robot type of method. Those really don't work, guys. Now, if you develop black boxes and you're a programmer and you create your own, it can work as long as you're able to manage it over time. But somebody that creates a black box and sells it to people, they absolutely begin to deteriorate the moment people start using them, so they don't work. So stop looking for them. If you want a one-click to riches, you're in the wrong place. Also, my results, guys, are not typical. Most of you on this very webinar will not be able, let me shut this. I'm pretty sure you see my spyware thing there. Sorry about that. Most of you on this very webinar will not be able to do what I show you, not because the information isn't useful, but because most of you will only observe and you will not act. I want to say this, guys, action rules. I can blow your mind with information. I promise to do it in this very webinar, but if your execution doesn't go beyond observing, you will never master anything. So let's let today be different, okay? I want to make a confession. This method only works, and this goes back to what Norm said when he was starting. This method only works in ideal conditions, okay? It may seem like I'm foolish to admit such a thing, but I want to be completely honest with you. I don't think you'll ever hear such a damaging admission on any webinar, but it's true. And if more people would tell you this truth, you'd be a smarter trader today. You see, part of making any good system work is identifying compliant price action. I'm going to show you some examples of where this works and where this doesn't. Sometimes it's a time frame that doesn't work and you have to back down. Sometimes it's the actual instrument itself that it's not going to work on. We need liquidity, fluidity on price, and compliant swing structure that allows us to predict. Guys, this is true with anything. So what I just told you here could be a problem you're having with what maybe you're doing right now, okay? You've got to look for compliant price action. If you've ever felt like you just don't have what it takes to make it as a trader, or that it's only for some smart elite group, let me tell you a quick story. I wish I could tell you that I work for all these big banks and Wall Street hedge funds, but I can't because I didn't. My start was a little bit more humble than that. First off, your presenter, that's me, is not a college graduate. He didn't have a dad on Wall Street who handed him all these great secrets. And like most wannabe traders, I struggled for years following every guru, every bit of information I could get my hands on. And I realized one day after many years, and I'll cover this with you, that I had not made a dime after like 3 years of trading. In fact, I'd lost money over 3 years. And it was really heartbreaking for me. I looked back at all the time, all the long nights, early mornings, staring at charts, all the note taking, there was no webinars back then, but there was a ton of information you can buy. In fact, basic technical analysis books, you could spend 25 grand on one course. And I did that. It was called something something PhD, $25,000 to learn about price patterns. So maybe some of you can remember those days. But I really love this stuff. I knew patterns better than anyone. I could scan, I could sort, I could find the best setups on the planet. Studying more and studying harder wasn't an option. I'd already read every book. I'd spent countless hours reading charts. I sometimes, like I said, woke up at 4 a.m. Okay? When I realized I'd lost money, I was really depressed. It was awful. Maybe you can relate, but if you can't relate to that, understand this. I had nothing on my side in the way of education, Ivy League membership, college, a family history that gave me an advantage. Nothing like that at all. In fact, I was at a serious disadvantage, and eventually I figured it out. So trust me when I say, guys, it doesn't matter who you are or what your lot in life. You can do this if you let me show you what I learned from all those years of failing. Sorry, I was looking at questions. So my turning point, after years of going from one shiny object to the next, okay, that's kind of what we do when we start out, and experiencing so much failure, one day a light bulb turned on, and suddenly I started to see consistent results with my trading. I wasn't getting rich, but I was seeing some progress that fed my fire, if you will. Let's see here. So all those years of chasing those shining objects, one of them was Bollinger Bands. I kind of skipped that slide because I thought it was a double. One of them was Bollinger Bands, and there was a couple of them. I went from one thing to the next. Fibonacci was another, and I'm going to cover that with you. But all those years of doing that, it did pay off for me because I looked back and I grabbed bits and pieces, and this is what we're going to talk about today. So a quick recap of my last 10 years. In the last 4 years, I have traversed many asset classes and successfully traded Forex, light sweet crude, soybean meal futures, and even commodity ETFs. I've made 6 figures in a year with substantially less in my account, and I continue to this day to make a living trading the markets. I started back in 2000 when the markets were essentially down for a few years. Fortunately, I was only paper trading at the time because all I did was lose. It wasn't until 2003 that I funded my account with $5,000 and I went for it. I got very lucky because in about April 2003 the markets got strong for a solid 9 to 10 months and I did very well. I ended that year with like 300% return, 15 grand on my 5 grand. Had a huge head. I really felt like I was on top of the world. I'd mastered the markets and I could conquer anything. I really felt that all that hard work finally paid off. At this rate, in 3 more years, based on my calculations, I'd have $500,000. And that would be just the beginning of a new era of my life where I could go even bigger. But suddenly, I realized my Bollinger Band strategy didn't work anymore. In fact, it was very depressing because over the next year, there was nothing I could do to get Bollinger Bands to work for me. At that time, I was exclusively really just using Bollinger Bands and kind of patterns. But at that point, I was all washed up once again, I thought. Then in 2004, 2005, we had a couple of bull runs. Bollinger Bands began to work again for me. At least the setup that I was so focused on began to work. It was then that I realized that my setup was golden in certain market conditions and worthless in others. And this turned out to be, guys, a tremendous learning experience for me. I knew I needed to expand my knowledge on this powerful indicator so that I could use it in any market condition in any time frame. I realized then a switch clicked, and I realized that I had to figure out these different cycles. So I set out to look at bull trends, bear trends, sideways price action, continuations, corrections, and so on. See if I could use this indicator to give me an edge so that I was what I was doing for the last 7 or 8 years paid off. And I realized that if you look at Bollinger Bands and you cue in on movement in any market, you can do that. There are times where Bollinger Bands does not help at all, but that's only when the bands have expanded dramatically and are not around price anymore. The further the bands get away from price, the less predictability they have. So there's another tool that picks up where Bollinger Bands leaves off, and I'll cover that with you in just a second. Just remember, the further away Bollinger Bands is from price, the less forecasting power you get. So here's what I discovered in those years. So grab your pens and papers now if you want to take notes, okay? Everything, guys, starts with price action. The most profitable traders and systems on the planet are price-based systems, relying on price action as the ultimate indicator. Price is first, everything else is lagging. Truly, everything else is lagging. Everything else is calculated based on what price does. So price is first. If price is our ultimate indicator, then where must we start? Let's start with the tools required to gauge price action. Let me ask you guys, can anyone guess what we use to assess price direction and get clues to where price is headed? Just a pure raw price action tool. Anybody have a guess? Let's see, we have 460 of you on almost. Moving average, volume, on balance volume. Those are good. RSI, ATR. Okay, support and resistance, someone said. That was Elliott. And then, very good. Lots of good guesses here. And a lot of them are very accurate. You know, we could talk about a lot of different price patterns and stuff, but ultimately, we're looking initially at support and resistance and swing structure. Okay? These are your grassroots, base level price forecasting tools. Like I said, we can also add price patterns, we can say candlestick patterns, but it goes without saying that what price is currently doing is an important indication of where it will move to next. Let's master these, then move into Bollinger Bands. So here's a classic textbook reversal, okay? Swing structure. Price is coming down on the left over here, and a series SH is swing high, SL is swing low. So we got a swing low, swing high. Let's look at the lows first, okay? You got a swing low, a lower swing low, and a lower swing low. Incidentally, of course, you're going to have a swing high, lower swing high, lower swing high. And this shows compliance. And when I talked about identifying compliant price action, you want to see a swing high, you want to see it followed by a lower swing high. Swing lows need to be followed by lower swing lows. And the further they go from the prior swing low, the stronger and more predictable the trend down. Okay? This is what we look for. Let me erase my drawings. And darn it, I hate using my pen. It makes me have to delay and do so many clicks to get to the next slide. So then what happens as price comes down and makes this swing low right here, follow my mouse so I don't have to grab a pen, we're still good. Price moves up, makes a swing high right up here. That is still lower than the prior swing high, so we're still moving down. Okay. Then we come down and make a swing low that fails to go lower than the prior swing low. This is our clue that price may be slowing down, moving sideways, maybe reversing. We don't know yet. But here's our clue that the trend that we were observing or a part of is slowing down. Okay? Then our confirmation that price is reversing is when price moves up and takes out the prior swing high. Then we get the series of higher swing highs and higher swing lows as price moves up. So this is your classic textbook reversal. In the midst of that reversal, we have support down here, and we have a resistance level up here that oftentimes has several hits to it other than just this swing high. That's kind of why I put the line here. But in my textbook drawing, I didn't note that. I should have, but I didn't. But in the process of swing structure and support and resistance, they go hand in hand because support and resistance is built off of swings. 1 or 2, 3 or 4, or if we get a sideways price pattern, we got a series of swing highs and swing lows that are not going higher. Like, for example, a channel sideways. I'm going to go ahead and grab my pen. Here's the channel sideways. Price moves up, down, up, down, right, up, down. And the reason it's moving sideways is because our highs aren't going higher and our lows aren't going lower. So regardless of what is taking place, it can all be observed through swing structure. Always keep that in mind, guys. You master swing structure. You master every pattern there is. Because, for example, let me show you one more thing. If price is making a high and a low, and then a lower high and a lower low, and then a lower high, see up top, lower low. I'll show you this when I'm done. Okay, what are we doing? We are making a wedge pattern, right? But what it is the highs are telling us they're bearish because they're going down, down, down. Okay, this is bearish. But we look at the lows, they're telling us they're bullish. They're going up, up, up. And they're coiling into this spring right here that's going to either explode in this direction or explode in this direction. So one thing you learn with swing structure is it's easy to identify bullish movement and bearish movement. It's easy to identify sideways movement. And look at this price pattern where our swing highs are telling us that there's weakness and our swing lows are telling us that there's strength. Every time price moves up, it encounters weakness. Every time price moves down, it encounters strength until it coils into this explosion and then we look back and say, that's a wedge pattern, right? And the cool thing about being a master of swing structure is you don't need to know about fancy names of all these fancy patterns. You just need to know what swing structure is doing, and that will guide you to the best decision you can make with regard to entry, exit, stop, everything. Okay. Now let's look at this time. This is a chart. Okay, we're coming up. Follow my mouse over here. We're coming up off of whatever this is, bullish movement. We flattened out right here. So we're just going to start right here. Observe this price action in real time. So price broke through a prior swing high, right? Here's the high up here. We're a little bit I call this kind of a railroad track of movement. There's no real clear swing structure here. I'm going to have to grab the pen again. We do have a move up and kind of a correction right here, and a move up, and you might call that black candle a correction, and then we enter this sideways move. So we have, this swing low, and we have a higher swing low. We have a swing high, a higher swing high here. Then we enter this sideways price action, and price breaks out right here of this swing high or the resistance. So we break out of swing high and resistance. This is a typical movement off of a bullish trend and a typical spot that one would consider entry. As they pulled up a chart, they see the bullish trend taking place. This is kind of where we would find action. Let's see here. All right, so next we get, follow my mouse here, price moves up here, pulls back right there. All right, so that's a higher swing low from this swing low right here. Get a higher swing. Price gets kind of sloppy in here, forms another higher swing low. So we got a kind of a swing right here. And by the way, guys, let me just tell you, textbook, a swing low, it consists of a candle here, a candle here, and a candle here. So as price moves up and does this, the swing is minimum, typically, a low, a lower low, and a higher low. That's what constitutes a swing, okay? And it's just a pullback and a resumption, pullback and a resumption. You can see it's so mild in here, it's difficult to see, but you still know it must be happening. Price is moving up. And in order to see that more clearly, you could, like let's say this is a daily chart of the Euro USD. We could jump down and look at probably a 1 hour or 15 minute, and we would clearly see swing structure, okay? So anyway, I just want to point out some real-time stuff to you. So price moves up here, pulls back to this level where it appears this candle is still going to remain bullish. This level here, follow my mouse, is still higher than this swing over here. So we're still bullish, but then price falls down here, okay, indicating to us that this bullish move is over, okay? So what do we do up top? Real quick, very important. We got this high. We got this, let's just go to this one, the higher high. And then the next high was a lower high, right? And it's a swing high because we got to look at the candles. Here's this high right here. Here's the higher high, the middle big one, and then the lower high is that one right there. That completed the swing. So ultimately, we've got a swing high up here and a lower swing high here, which is a clue that price might be reversing to the downside, just the opposite of what I showed you on my textbook example. And then when we take out this right here, there's confirmation that this thing went down and it's going to reverse trend. And it did, at least for now. Came all the way down to here, right? And then what did it do? And I wanted to show you guys this because you're not going to run into textbook swing structure all the time, but it's still your duty is still to follow it because it is the ultimate guide. Price will do whatever the heck it wants, but we've got to find a way to be on top and be cued to immediate movement when it takes place. Now we come outside of this Bollinger Band right here, and I'm not getting into Bollinger Bands just yet. I'm really just talking about swing structure. But now price moves up, and as a swing structure expert, we would expect it to probably reverse right here because here's the last swing high, my sloppy arrow right here, right? And as price comes up, we'd expect it to make a lower swing high right there. Now I'm going to delete these drawings because they're getting ridiculous. At this point, price doesn't reverse. Here's the candle where, gosh, it should have reversed, but instead it moves up higher. Okay, pretty good clue that we're going to, as soon as this happened, I knew we were going to come down and make a higher swing low. Here's the swing low, here's the higher swing low. So we just kind of flip-flopped right in here, and then we took off to the upside. Okay. So even though swing structure wasn't really compliant here, there is still plenty of trades to take advantage of and make money on by following it. Okay. Then price, like I said, that red arrow is where I figured it should have reversed, and it didn't. But then as price comes up here, what do we have in the way up top? Well, we have this swing in the way right here, and then this swing is in our way. And when I say in our way, I mean as price moves up, prior swings they create resistance levels or barriers to that movement up, and it's a pressure point actually. So if we're, and I'm going to get into that with you, so if we're bullish, we have to be aware of these as price moves up. So price kind of channels between the two right here before taking off ultimately to the upside. So I just wanted you to get a feel for that. I don't want to stay on this slide too long here because I want to show you some really uncompliant swing structure that ultimately led to a nice move, but I just want to draw this for you. Let's see here. Remember when I said we need ideal conditions? Here you would observe the conditions that are not so ideal on this particular chart, but one could certainly go from this chart to a smaller time frame and trade this effectively. And here's why it's not ideal. I'd like to make my pen, let's see here, thicker, but I'm not going to. So price comes down. I'm going to draw these swings. Boom, boom. Follow my drawing here. All right, this green is not the best color. All right, so notice we get a lower swing low here, and then a higher swing low. So these are swings. This is price is coming down, still coming down, and then it fails to go down. And then we assume, okay, price is encountering bearish weakness. It's probably going to reverse. Then it goes up, takes out this high right here, just like the textbook, and so we're confirmed. It's reversed. Then it comes all the way down and takes out this low right here. So we're getting back and forth action. So here we're like, oh yeah, it's reversing, and then immediately the next move is, oh, maybe it's not. Then we move up really big again, formed a lower swing low right here relative to this one, and yet, okay, so now we're going to move down, and yet we just come down here, boom, we form a higher swing low from this one back here, and price moves up, only to get sloppy again. Just notice that the swings contradict constantly. You cannot predict that on this chart. Now, one thing you can observe is that in between these swings, there is plenty of, depending, I shouldn't say that, I don't know, but it appears to me that, for example, this bullish movement up right here, this bearish movement down, of course, and even this movement up, and even this large black move down. Those are all large enough price moves to probably move into a shorter time frame and identify some really strong compliance in between this uncompliant chart. Hope everybody's starting to pick up swing structure, and it's confusing.
Mark, can I ask you? Everybody seems to know what the Bollinger Band lines are, but we're getting questions about the red dotted line and the green line. If you can tell them what those are. Sure.
Let's do that. Okay. The red dotted line is my Bollinger Band mean. So if I've got a 20 standard or a 20 period Bollinger Band, that means my mean is a 20 period mean, and then the little green line is just a 21 period moving average that I like to set up, because it's a Fibonacci number, and it's really important when, for example, the red line isn't going to hold. You can see they're kind of separated right here. You'll find oftentimes where they pass this red line, bullish or bearish, holding support or resistance, the green line may come into play very often. We're not seeing that here on this chart at all, but it's something I observe often, so I like to use it on my chart. The blue line is a 200 period moving EMA, and then the big fat black one is a 55, and that makes up the system. This is really all I use right here, guys. So let's see here. Here is perfectly compliant price action. And it doesn't, like I said, I wanted to show you that chart to show you some uncompliant stuff, because you're going to run into that, and you got to find a way to skip it or trade it. And one way to do that is to go down to a time frame. You know, make your observations. You can't observe uncompliant price action until it becomes uncompliant, and it becomes uncompliant when swings get violated. You know, we're making lower swing lows. We make a double bottom. We begin to take out swing highs and move up and reverse. And then we start taking out lows again. There's just unpredictability there. But yet you observe large moves between these swings. You can still take that information, go to a smaller time frame, and find some, many times, find some stuff that looks like this right here. Ultimately, here's what we're after. So here's what happens on this particular trade. We get confirmed support pressure, okay, down here on the bottom. Okay, we've got this bottom, which tells us nothing as far as the trade goes. But then price comes over here, the second red arrow, forms another bottom, and begins to move up, where we get this double bottom, then my favorite pin candle, where price actually moved down below the support level, then moved up and closed above it to confirm it even more. So we get a break of the swing high after that. Here's the swing high up top right there. Price moves on and breaks that. And let's see. As you may remember from some of the videos, we call these pressure points, but these are ideal conditions. And of course, the break of this level, we get expanding Bollinger Bands and price takes off. Okay, these are ideal conditions, and this is ultimately what we're looking for. So once we've tackled support and resistance and swing structure, we can move to Bollinger Bands and pressure points. If you paid attention to the videos leading to this webinar, you know that Bollinger Bands has some very specific characteristics that allow us to forecast direction and strength. I want to recap that with you real quick. Basically, let's just start up on the left right here. Slightly bullish upward channel. Bollinger Bands are moving up slightly. There's no expansion going on. Both bands are kind of headed up. Price is kind of green or white or whatever color denotes bullish candles. Price is moving up. The bands are moving up. It's slightly bullish. The bands are slightly moving down. Price is slightly moving down. There's no real expansion going on. It's slightly bearish. If the bands are kind of moving sideways and price is moving up against the band and the band doesn't really pull away from price, resistance is likely to hold. Okay. Same with the bearish move. Bearish move against the bands. Bands doesn't really pull away from price. Okay. Price isn't able to really push the band. Support is likely going to hold. Bottom left, if you get price moving up to a band that is moving toward price action, so it's not flat and it's not moving away, resistance is going to likely be even stronger. And then support is even stronger when price moves to a lower band that kind of has the appearance of moving in towards price action. Bottom one right over here, slightly bearish, is when price moves down to a lower band. Lower band begins to expand as the upper band doesn't really do anything, or maybe the upper band curves down with price as well. That's slightly bearish, I'm sorry, right there, slightly bearish. Slightly bullish is when price is moving up against an upper band. The band begins to kind of pull away from price and move up with it. And the lower band, maybe it's flat, maybe it's moving up with price, maybe it's slightly down, but it's not expanding like the upper band is, so that's slightly bullish. So extremely bullish and extremely bearish are really what we key in on. And extremely bullish is this middle one here, where price begins to move down, the band expands aggressively, and the upper band expands aggressively as well. That's your extremely bearish right here, okay? Extremely bullish is just the opposite. Price is moving up, both bands expand, okay? There's a couple things to note. One is that Bollinger Bands doesn't key into direction, only volatility. So sometimes price can, on an expanding Bollinger Band, as you see these bearish candlesticks coming down, price can take off that way. And Bollinger Bands was still right, because Bollinger Bands does not denote direction, just volatility. Same with bullish. Price can be moving up. You get your expansion, and Bollinger Bands can take off in the opposite direction. And this is why pressure points and swing structure and support or resistance is key in successfully applying this to your trades. Okay, got to go back to my arrow. There we go. All right, so we key in on these two, okay? Mostly you're going to be looking for extremely bullish and extremely bearish, and then contraction. Expanding and contracting Bollinger Bands are your main components. So there's not too much to remember here. One important thing is to always keep in mind, always look at how both bands react to approaching price action. If price is headed to an upper band and that band is expanding, what is the bottom band doing? It's critical and it's important to correctly forecasting price direction. So what's left? We've got pressure points and Fibonacci. So we've looked at price action as a whole, swing structure, support and resistance, a little touch on Bollinger Bands. Now we're going to look at pressure points. Now pressure points come from so much. We get pressure points from support and resistance, pressure points from swing structure, pressure points from expanding or contracting Bollinger Bands. Overall market or larger time frame. In the case of Forex, for example, we're trading a 5-minute chart. We're not necessarily looking at the overall market as we are a larger time frame that's consistent with giving us aid to the time frame we're trading. So if we're trading a 15-minute, we might be looking at a 15-minute 1 hour. So whereas the stock market, if we're looking at the SPX or Chipotle Mexican Grill, maybe we're looking at the overall stock market as a pressure point, because if the market is flat or down and Chipotle Mexican Grill has a bullish setup, we know there's downward pressure on that stock, and that's the overall market itself. Prior candlesticks are also pressure points. Steve Nissen, I don't know if I'm saying his name correctly, but and a lot of guys out there. There's a lot of great candlestick guys out there that are, and I believe in candlestick patterns wholeheartedly. So we want to look at candlestick patterns, at least the last 3 candlesticks leading to whatever setup we're looking at. Those last 3 candlesticks, without having any knowledge of candlestick patterns, what did those last 3 candlesticks do, and what sort of pressure does it add to our favor or against us? And then, of course, one of my favorites is divergence. I use a simple 12-26-9 MACD, and I look for divergence from MACD to price to identify pressure either in my favor or not at all. I don't get it even on half my trades, but when I do get it, it's great. So let's look at it at this example again through the eyes of pressure points. Okay. So when you look at this, ultimately this trade right here, the pressure that we had in our favor, our bullish setup, was we had a double bottom. Better than a double bottom, we had that pen candle on the right that pushed down through support and then came up and closed above it, kind of triple confirming that double bottom. It's one of the greatest double bottoms you'll ever get. Okay. Number 2, we had a break of moving average resistance. Okay. We broke through the 200 and we broke through the 55, right? We broke through both those thick lines. Number 3, we had expanding Bollinger Bands. Look at that Bollinger Band expansion. Both bands expanded. Where that third right arrow is pointing upward to that horizontal red line, that's basically the entry point. Look at both bands at that time. They were both expanding aggressively. And if you look down below, we had MACD divergence. MACD divergence is where, if price makes a low and a double bottom, and MACD makes a low and a higher bottom, that's bullish divergence. Okay, divergence is really easy. If you're looking at price lows, look at the bottom side of MACD. If you're looking at price highs for bearish divergence, look at the top side of MACD, and look for MACD to do something in the nature, like if you're looking for a bullish divergence, you look for MACD to make higher highs, higher lows, where price is making either a double bottom or not a higher low, okay, a lower low. So that divergence can lead you into trades that you otherwise normally wouldn't even find. Give you extremely good confirmation. So the opposing pressure, so when we look at our trade, we look at our setup, what's the opposing pressure? Well, we had this resistance above, and you'll have to excuse me, sometimes I continue talking while I'm clicking my mouse, and I just say things. I apologize for that. but we had this resistance above. So as price moved up to that level, we were cognizant of this level, and you'll notice this really, if I drew that line a little better, that candlestick came up and hit it and closed below it, giving us the initial thought that maybe price is going to bounce here, but instead the next candle floated right through it, really fueling this trade once we passed that resistance level into a nice, beautiful trade. Okay? Always look for pressure points, guys. They're very important. If you paid attention to all the videos leading to this webinar, you know Bollinger Bands. Okay, I didn't delete that slide. This is about the third time I've left that slide there. So let me show you how well Bollinger Band Jackpot did at forecasting the recent crash last month. Again, I told you early on I was going to use this as an example because it's a perfect example of how Bollinger Bands can get you early signals, early warnings, early notice, just in time, et cetera, et cetera. Here is what took place. Let's add up the pressure points and gauge the overall setup. I've shown you guys a lot up to this point. So there's, even though we're looking at, price in the past, you can still take what you've learned here and say, okay, based on what he said, let's take a look at this. So let's look at the lower swing highs first. If we're looking at potentially shorting something, and this last candlestick tells me, it's kind of the needle in the haystack, not the needle in the haystack. This is what pushed this thing over, okay? So let's look first at, since we're looking at short, let's look at the lows. We have a break of a lower swing low and a strong support level that's being broken by this current candlestick. Remember how I said first swing structure gives us a clue, then confirmation that it might be turning. How about this break of the moving average support, that blue line? Do we also notice expanding Bollinger Bands on the top and the bottom? How many pressure points do you see here? Let me see if I don't do this yet. In addition to that, we also had, let's see, I got to grab the pen again. All right, we also had, let's look at this swing over here. Let's go over here and just look at it, okay? We got a swing, okay, swing high. We got kind of a double top swing high, maybe even a triple top. We'll just call it a triple top right there. Then we start to get a lower swing high, and we'll just call that one, and a lower swing high. So over 1, 2, 3 months, this thing could not break this level and started to falter in this month, kind of giving you this look, okay? Yeah, we're kind of moving up, and no, we're kind of moving down, okay? Over a long period of time, I believe this is the S&P 500, coming close, converging on these important 55 period, 200 period moving averages. This is significant. Then as price starts to come down here, we're looking at these levels right here, okay? But ultimately, this candle pretty quickly on this day took out this level right here. So here we are with this level right here. So one thing I did say, let me get my pen tool back on here, erase all drawings. Let me see if I can go back. One thing I said right here is we could easily enter this trade right here. Okay, near the close of this day, we could have entered this trade. But if you lack the confidence, we've got Bollinger Band expansion. We're breaking support. We're breaking this swing low. We've got this series of topping and lower swing highs and expanding Bollinger Bands to the downside. Beautiful, perfect setup right here. But if we lack the confidence to get into that trade, there's this day right here. Literally at the open of business on that day, we opened below that very important support level that was broken.
Kind of lost your arrow there.
Okay, well, this support level right here. So yeah. So on this day right here, we that red line. See that red line, guys? If we did not have the confidence on this day, as we broke through there at the close, okay, near the close, we closed right there. So if we didn't have the confidence to get in here on this day, we had a second chance right here. And I took a screenshot of the bid by ask on this day, 44 by 46.30, to show you guys that I don't even think the market makers were prepared for what took place next, because the spread on this was still reasonable. So if you didn't have the confidence that day, you had a second, okay? And let's look at what, I think we all know what happened next. For me, it was a $12,000 two-day period. That day that we entered, and 2 trading days following. And when you get extreme movement like this, you can always expect a retracement. And when you get an option that makes you this much money in a couple days, you always want to take it off the table. You can always re-enter the trade. I'm never really a long-term options guy. I do like 3 days, 2 weeks, something like that. But big moves, big money like this, I'm always taking it all off the table, letting the retracement take place. And this is almost 150% return in a day. You tell me, based on what I've shown you today in the last few videos on Bollinger Band Jackpot, did we not pinpoint this trade? Was it not super easy to spot? This was a very easy trade for me. The only time we miss moves like this is if you're not paying attention. The only mistake I made here was allocating too much to this trade, but that's kind of my style, and I blame that on a book I read by Jesse Livermore. So let's talk about Fibonacci real quick, because this is what I want to talk about with what took place next. If we look back at this trade real quick, look at, here is, let's see here, we close here. Here's price action. It's, Bollinger Bands is buried under this price action, but you can see the top band is way out here, the bottom band is way out here. We really can't get anything from Fibonacci, from Bollinger Bands anymore when it's that wide. The only thing we can get is an assurance almost of a retracement. And this wasn't the perfect setup for a guaranteed retracement, although I do cover that in the members area, and I'll touch on that in a minute. So what we do is we lean on Fibonacci next. Okay, guys? What took place was, and you can see on that particular day on the close, that Bollinger Band was hidden way down here. But as price moved up, you can see Bollinger Bands is dynamic. Bollinger Bands moved up to this level, if you follow my mouse here. So now this is kind of tricky, because a lot of times when we look for a price that is closed outside of Bollinger Bands, the moment that candle prints, Bollinger Bands is down here with the candle. Okay, the next candle has to kind of print for it to move and begin to relax and absorb the new information. Okay, and that's an important observation. But at this point, we were hopeful that price wasn't done moving down, and waiting on the retracement, not knowing what kind of retracement we could expect, but we waited a few days, and when price did this, we thought, okay, now it's time to use our Fibonacci, okay, and that's what we did. So how do we grab the next move down? Right about here, we began to lay out our Fibonacci tools. Price is slowing. We can visually we can see there's about a 50% retracement. Okay, if we look at this high right here, and we look at this low down here, we can see we're probably halfway back, right? Because a retracement is nothing more than how far back do we make it. If we make it back up to here, that's 100% retracement from this high. So just a visual observation tells us we're about 50% back. So we go to our drawings, grab Fibonacci retracements. We click on this high, click, drag, click, drop down our retracement levels, and we can see we're dead on. What we're looking at, guys, is 50 to 61.8%. That is what you will use 90% of the time. That is where you will be keyed into some beautiful trades at a 50 to 61% retracement level. So what happens here? Look, price moves up. Notice we've taken the high. All we did was take the high, take the low. We didn't look at where price was. We just grabbed that high and that low, and look at price at that 50% level. Now, it could still move up. It may not, but in this case, it was actually textbook perfect. That's why I like to use this particular example, because it just happened, and it's perfect. Right at the close, this prints a lower swing high. Now, under normal circumstances, this could easily not be the swing, okay? It only takes a candlestick high to make the lower swing high invalid. And what I mean by that is this thing hadn't closed yet. So if it closed up here, right there, we don't have a lower swing high. And I say a lower swing high from this high up here. You got a swing high, lower swing high, and a lower one down here. So this price pattern is consistent with making lower swing highs. It's happening at a 50% retracement level. When this candlestick pushes down here and I decide to enter this trade, this thing could reverse and close up here. It's happened to me before, okay? But in this case, I was pretty confident with regard to this huge push down, this 50% retracement, that we were at least going down to here, okay? That was my thought. And we get a kind of a three candle break right here. We got a high, higher high, lower high, right? There's our swing. Now, granted, this thing isn't closed, but I took the chance and entered this trade short right here. And let's see here. And price just rocketed to the downside, took out that 23.6% retracement level, and because of the money on the table, I took the trade off right here. Okay. Again, when you're talking about this kind of return and an option, you just want to pull the money off the table. because oftentimes what can be followed by this kind of move is back and forth price action before price goes in any direction. And it's exactly what took place up really until now. We're kind of slightly headed down now, but some beautiful things took place. I wanted to add some slides to this and show you current SPX price action. I didn't have time, but some really cool stuff happened that Bollinger Bands and pin candles just nailed perfectly. The cool thing about this method, guys, is you'll know exactly where to trade, and you know exactly when to hold off. I call it building a case in both directions, and in the members area, I did a video on that trade, really live. I did everything live. I pulled up the chart, we were watching it live, and we took the trade. Everything I just showed you there is live in the members area, okay? And what I do is I build the case in both directions, okay? So when you're looking to short something, you always want to say, is there pressure points and a way to build a trade? What is swing structure telling me about the other direction? And if we go back to this trade right here, for example, it doesn't tell you anything. Okay, you can only, when price reversed at the 50% retracement level, I'm going to show you how you can only build a case for one direction here. But if you go about swing structure and you attempt to quickly build a case for both directions, you will always be making the right decision every single time, even if you're wrong. And it's amazing how smart you don't have to be to do this. So do you see why Fibonacci complements Bollinger Bands so well? It's amazing. So Bollinger Bands pinpointed the crash, the bounce back, and the resumed downtrend, and it allowed at least 2 out of those 3 moves to be captured. We didn't touch on the bounce itself, but it was easily predictable. But let's just say we were at least able to capture 2 of those 3 moves. Good stuff so far, guys? Let me know if it's good stuff. Just say yeah or good, okay? Oh, wait. Yep. Tom was first. All right. Excellent. Lots of people. Okay. All right. Next, we want to consider overextended price action and the pressure that it brings with it. This is especially important on entry because, bottom line, guys, your entry is really important. And when you enter a trade, if you can get price up and away from your stop and your entry, like instantly all the time, your overall risk profile changes so dramatically that you leave plenty of room for other errors. So ideally, we want to be able to identify immediate thrusts, okay? And that's really what this is all about. What I'm showing you here how to do, we're doing more than that. But the critical point of a trade is that immediate thrust. First of all, it allows you to not have panic attacks. If you get into a trade that sits on your stop, sits on your entry, it's just no fun. It goes sideways for hours or a month. You guys know what I'm talking about. So let's look at overextended price action, because if I can leave you with this additional bit of information, it's going to help you dramatically. I had to draw this because I had to make the slide and I didn't have time to really search for a perfect setup, but I want to show you the textbook classic. So I do have an example to show you, in fact, on Euro USD before we're done. So notice as price breaks through what might be considered a solid entry here, right? Maybe it's been channeling sideways for a month. Here it's finally breaking through. Price itself is overextended relative to itself, okay? We have 1, 2, 3, 4 large white candlesticks. Certainly due for a pullback. So by the time we enter this thing is probably going to pull back. This could usually, and usually does present you with a situation where risk is much higher than you might think, because a pullback to support, which could put the immediate red right after we enter, is actually likely to happen. Or a pullback to this level right here. Now, if price pulls back to that level and takes off like that red line indicates, we're still bullish. We're still bullish because notice my 2 horizontal red lines. We got a swing low and we have a higher swing low. So here we're having to stop out of a trade that's bullish when we're bullish. Do you see the problem with this? You entered a trade because you thought it was going to go up, and it was, and it did, but you entered on overextended price action. Okay? Burn that into your heads, save yourself a bunch of grief with my system and any system you use in the future. Okay? Ideally, what would happen is this, and this is what I would wait for, either one of those. But if I was about to enter this trade, I would observe the overextended price condition, and I would say, let me let's hope, let's build a case that this thing is going to go up, pull back to this support level. Support's going to hold. Then I'll enter at that support level on some sort of 3-candle break. Let the swing, higher swing low print, and I'll take the high of the candle that printed the swing low right in here, right? Something like this. Let me show you what I mean. You know, we get a candle here, get a candle here. Maybe this candle comes down, but it closes at that support level, and the next candle begins to open here. And as we take out this high right here, I take that trade. So now all of a sudden, my price conditions are not overextended. I have additional confirmation that this is bullish, and I'm in this trade to the upside. It took me years to figure that out. And you just figured it out today. Unless you already knew it, of course. All right, guys, let's see here. We are coming in for a landing. So let's look at the Euro USD recently, real quick. Take this trade, for example. The failure to make a lower swing low marks the possibility that price is reversing, just like I showed you. We get a low consistent with the move down. We get basically a higher swing low right here. There's our clue that price might be reversing. Then price takes out the lower swing high. So here's a swing high right here. Price takes it out right here. However, price is probably due for a pullback because look at the overextended condition. So rather than enter here, rather than draw our level and take this trade right in here, why not wait for it to pull back to support as it did right here and then enjoy the sweet gains? So that's current price action on the Euro USD and a perfect example of what I just demonstrated. Does that make sense to everybody? Always be cognizant of overextended price action, and that's like the final piece of using swing structure to validate where you place your bets. So instead, again, we enter here. Instead of taking that trade at the overextended condition, we take it as it takes out the highs of the candles that completed the swing. The only caveat to that is sometimes the beginning candles that make up that swing are too long, and it takes too much time to take out those highs, and we end up in an overextended condition again. So sometimes we just get into the trade when we can kind of confirm visually that the swing is completed, knowing that, like for example, I don't want to leave you guys thinking. So, you know, let's just say this was a big old candle right here, the first candle, and then here's this candle moving up. All right, this next candlestick opens. I would just use the high on this candlestick right here instead of waiting for this one, right? Because that puts us a little too overextended. Okay. Anyway, moving right along. Let's see. Erase drawings. Normal arrow and click. So this, guys, you know, because of the nature of swing structure, support and resistance, Bollinger Bands, it's all price-based stuff. Because of that, it works on everything. Stocks, options, Forex, futures, commodities, ETFs. Tell me what you trade. I'll show you what this works on. So what's next for the Euro USD? Now, my slide here is from, I think, about a week ago or 2 weeks ago. But I said here, and Norm's proof, and maybe some of you guys are, that we indicated we would be bullish on the Euro USD for now. But I want to show you how easy this is. My preference is to be in line with a daily chart. This isn't absolute. But if I'm going to trade Forex, I look at the daily chart, and then I look at my 10 or 15-minute chart or 5-minute chart, whatever I'm trading. You could just go to the 5 or 15-minute chart if that's your preference. So right now, my closest potential setup is long. So why is that? Right now, I have a higher swing low at support. Notice my higher swing lows right here. Now, granted, for the interim, we are actually down, right? We got this high, and we come down. We make a lower swing high right there, and we come down. So this little push is bearish, but it just met a trend that's bullish. So right this second, I mean, I could go either way right now, but right now I'm suspicious of a move up, okay? I believe that this pullback to this level is going to be the extent of this move, at least for now. But I don't care what it does. I'm just saying, okay, I'm gonna wait for a long position right now. But we could easily break this level and begin to build a case for a short position. And I'm going to look at both scenarios. But for the moment, I'm long, okay? And I forget which, okay. So here's what happened. Here's the update. That was a couple weeks ago. That was where what I just showed you. If you go back, look at this red arrow here on my left, okay? And you can see we pushed up, which is just what I anticipated. But I don't care to be right or wrong about that. I don't need to be right or wrong about direction. I need to follow swing structure and price action, and I'll always be right. If I have a long bias, I'm not going to go trade right then. I'm going to look for a long trigger. There's two things that must come into play when you enter a trade. There's a signal and there's a trigger. And when price moves down to this support level, I say, okay, you know, what's next? It's probably going to be long. And maybe I'm right, maybe I'm wrong. Maybe I'm only 50% right about that. But until the action unfolds and a trigger sets in, and I make sure swing structure is compliant, I'm not using overextended price action. I get Bollinger Band expansion or contraction or whatever I'm looking for. The pressure points stack up and get me into the trade. Only then can I really be right or wrong. But if I follow those closely, no matter what price does on me, I'm always going to be right. So here's where that action took place. You can see we were bullish, and we made this slide was about 2 weeks later. So the update is that we hit support, we moved up as Bollinger Band Jacqueline indicated was likely, and just about every other day during the 7 to 8 days that followed were trades like this on the right. Okay, you can see price action is a little blocky on this 5 or 15-minute chart. I'm not sure what it is, but it's still predictable. We have over here on the left a low, a lower swing low. Okay, nice pin candle right there, and kind of a higher swing low. Do we see this swing right there? And then we took out this prior high on an expanding Bollinger Band. This one candle was a little overextended, so we immediately got a pullback, but only to support, which did not violate our stop or our entry, and then price took off to the upside. Literally every other day following that picture on the left, there were setups just like this. You can go find them yourself on the Euro USD right now. So how's Apple doing? So I've got a couple pictures of Apple, a picture I took about a week ago, and then current price action. And I said initially, here's what I said, Apple is obviously moving down, but look at these candlesticks, very unpredictable. How are we expected? If the root level is immediate price action, which is the immediate candlestick, and if we can't predict candlesticks, how can we predict bigger price patterns? So when I look at this box right here on the left, there's confusion. Price is up and down, and it's up and down, and it's up and down, etching downwards slightly. There's nothing there to do. Big question mark. So we come to the picture on the right. There's the same box. There's that containing that price action that I'd outlined in the previous picture. But you can see price began to move up, and we just observe that we got kind of a low right here. We got kind of a higher swing low, and we're kind of basing to the right with my resistance. So price is getting a little more predictable as we speak, but there's still nothing going on. But do you see how we go from total confusion to starting to observe a pattern of swing structure, support and resistance, and candlesticks that start to become predictable, and we get Bollinger Bands closing in on price action? Might we be setting up for something big with Apple? It's very possible. It's very probable, and I'm hopeful, and I'll be watching. So when it takes place, I'm ready. How about light sweet crude? When we looked at it 10 days ago, this is kind of what it looked like. Beautiful bull trends. We made thousands and thousands, bear trend, thousands and thousands of dollars on this move down. Every day there were these massive, beautiful trades. We had bearish bias. We were on a 5-minute chart trading this thing to the downside. Then it spiked up, and let me go back, sorry. And it spiked up aggressively and then began to kind of get indecisive. Appeared to still be probably going down a little bit to some level. Maybe here, we throw down a Fibonacci retracement level, we're probably going to find 50% is right in here. So I would say maybe this thing's going to move down to that level, okay, and be right in line with our Bollinger Band mean 20-period moving average right here. So we had bearish bias. We had just missed this trade I just thought I'd lay out for you. We just missed this following that daily chart, where we have Bollinger Band expansion, a break of a prior swing low right here. We've got a lower swing highs up top going lower, indicating bearish activity. But as you can see by the 20% slant, this is another observation you might want to make, kind of a 20% slant with price action. This thing is barely moving down. It's kind of just moving sideways. You want to keep a real tight stop here if you entered this and not tolerate much movement against you. So there's nothing really solid going on. Can we trade it? Yes, but there's no real clue of anything big upcoming. And the truth be told, the big stuff really doesn't happen instantly. You're only cued in initially as a nicely expanding set of Bollinger Bands as part of your entry, just like you see here. So even though this is only 20% grade, which would indicate, you know, very little movement, we can't always judge it. We always kind of look back past in price action to see what the potential really is. Here's price action today, right now, as of this morning. So we had that move up, okay? I said we were slightly bearish here. You can see we did pull back to the red line, but actually the red line moved up to meet it. I didn't lay down my fibs. Maybe I should have. And now price is just kind of moving sideways, ever so slightly down, and that's kind of what's taking place with light sweet crude. So who likes Mexican food? I don't know if you guys have tried Chipotle Mexican Grill in your area yet, but love the food, love the stock, okay? How long did it take for you to see there's nothing really going on right here on the right by the red circle? Okay, you got wild candlesticks that are up and down, and you could, if you were scanning for stocks and you looked at this, there's nothing going on. But what is cool, and what we took advantage of a couple months back, is that move at that low at 597.33. Let me just go over that with you real quick. About 8 weeks ago, you got your first clue just like you always do in this particular setup. You get confirmation, you get the clue that price is no longer moving down. We got our lower swing lows right here. Price moves up, comes down, makes a double bottom, okay? So then you get your confirmation of a reversal as price moves up and takes out the prior swing high. We also get expanding Bollinger Bands. We break the prior swing high. We break the moving average resistance for a whopper of a killer move up. So what do we have here? We've got Bollinger Band expansion, number one. Number two, we got a break of a prior swing high. Number three, we got a break of moving average resistance. Number four, we got a double bottom clue. Number five, we got a price candle opening above the prior candle's high. Just a ton of pressure that would easily have put even the most novice trader into this beautiful trade. I can almost bet you money if we look down below, we'd probably have MACD divergence. And anyway, nice, big, giant move up. So right now you guys are probably sitting at your computer, you're watching this webinar, okay? You're sitting here, you're watching this webinar, you see that this works. And you know that a method such as this would probably very likely help you achieve your goals fast. On a scale of 1 to 10, let me ask everybody, and you can answer if you want or just say it in your mind. On a scale of 1 to 10, how committed are you to making this happen? Hopefully you learned enough on this webinar to really launch you into higher profits the rest of this year and beyond. But are you really ready to take this information and learn it at a level where you could make these kind of returns, just like I showed you, on a regular, consistent basis? So on a scale of 1 to 10, where do you fall? Because if you're thinking 4 or 5 or even 6, this may not be for you. But if you're at a 7 to 10, then let me just say it's really, really easy to get started. I still see a ton of answers coming in, mostly, you know, 8s, 9s, and 10s. Do see a 4 there, okay, but big numbers. Now, I'm not going to get all hyped up, and I'm not going to try to get you all hyped up about what this is and how it can help you. You've listened to me, you've heard my story, so you know that this can help you. So what I want to do is I just want to go over exactly what's in the program and show you how it can help you. If it's right for you, I want you to get it. If it's not, I don't want you to get it. And I'm going to do this without fanfare. I'm going to do it without any hype whatsoever. So here's what you get. We have 5 quick start modules. These modules will get you up to speed in doing this right away. Module 1 is setting your charts up, how to read Bollinger Bands like a pro, how to use the system intuitively, and literally remove the confusion with regard to when you should trade and when you shouldn't. It's a confidence builder like no other, guys, having the ability to know when you should be trading and when you shouldn't be. We're going to look in Module 2 at reversals and continuations and how they set up and how to confirm the highest priority in either direction. Module 3, we're going to look at all the setups, and they're all based on swing structure, support and resistance, and Bollinger Bands. We're going to look at the technical combinations, exactly what you should be looking for, and how to execute the trade setup from start to finish. Module 4 is how to search and scan for the most lucrative opportunities. I'm going to use the Thinkorswim platform. I'm going to use Stock Fetcher and to kind of cross borders there and show you guys multiple ways to search for opportunities. With Forex and futures and things like that, there's no really searching and scanning necessary. You're just got your little basket of things you trade and you wait for the setups. Number 5, we're going to kind of repeat everything in a fashion that'll allow you to really make this yours, make it, burn it into your brain and make it intuitive. Then we have our advanced tactics side of things. It's another 5 modules where we talk about more on pressure points. We're going to do advanced swing structure, how to effectively use Fibonacci. Module 4 in the advanced tactics is dual time frames with Bollinger Bands that'll give you even greater accuracy. I can tell you that I use dual time frames in everything I do, but it wasn't appropriate to do so in this webinar. It would have made it twice as long. Module 5 is one of my favorites. It's called Extreme Candles. This is almost a system in and of itself. Extreme Candles outside Bollinger Bands presents a remarkably low risk profile scenario. In this module, we cover exactly how to extract as much out of these killer setups as possible, all while keeping your risk so low that it's almost laughable. It's a blast. It's just a lot of fun because it's so predictable. In addition, you get webinar. We're doing a couple of webinars, and you get all the support you need. Live case studies that we're uploading. I have a live video of the trade I just showed you in the members area. Next week, we start our webinars, and more live case studies go up, and commentary across asset classes and instruments. We will be covering Forex, stocks, and futures with this amazing system. We have somewhat of a help desk. We will not leave you hanging. No question is too insignificant. You get all the support you need. I told Norm I used to answer my emails about every 2 or 3 days just because I get so many. But since we've been doing this, I've been answering emails every other day or every day. If the weekend is here, you know, I don't usually answer emails on the weekend, but pretty much Monday through Friday, I'm on the email answering questions. If you give me images, I'm glad to comment on them and help you out in any way I can. Plus, live trading recordings of current markets. Similar courses, guys, cost $2,000 or $3,000 that don't even have near the predictive capability of what I'm showing you here. But in speaking with Norman, and he agreed that traders kind of need a break right now. It's not been easy for all of us, so I really want to help you guys, and the best way to do that is to give you a great price on a program that is easy to learn and apply, something you can use forever. Naturally, if you put to use everything I showed you here today and everything I cover in my private members area, you are going to see fantastic results. So our webinar attendees always get a great price. We open this to the public. Norm can correct me if I'm wrong. I believe tomorrow at $997. Today, you know what, Norm? I think my link might be wrong here. I'm not positive, but we'll see in a second. Today you save $200, and you get a full 60 days to kick the tires. Here's why this is a safe decision, guys. You get a full 60 days to try it out. What more could you ask for than full use, full support? Everyone on this end here helps you out to make you succeed, make sure you succeed, and a full 60 days to make sure this pays for itself many times over. This is an investment. It's not a cost. It's one design to put a nice profit back in your pocket, multiples of what it cost you to get involved. If you act before midnight tonight, you save $200. You get everything for $797. I think that link is correct. It's thedisciplinetrader.com/BB-VIP. So if you're committed to making this happen, if you answered on 6 to 10 on the previous slide regarding your level of commitment, then there is no better time to act than now. If you do before midnight tonight, you get the $200 off. You can start immediately. All of those 10 modules are up and then some. There's a couple of bonus modules already up. Everything is there for you to get started. Remember, this is not an alert service per se. I do alerts strictly for the purpose of getting you guys on top of Bollinger Band jackpot action so you can see it live. I don't want to be the guy that gives you alerts so that you can just blindly trade. I want you to take what's in my brain, put it in yours, and run with this for years to come. So keep that in mind. I want you to become 100% proficient. Use my alerts as a way to make this yours, okay, and not just mine. I think with that, Norm, I'm done. I'm ready for questions.
Okay, I see they're already coming in here. Thank you, Mark, for another tour. And thank you. I already see an order coming in. I don't know how you got the link as I was putting it in. The first order came, and there's another one. Thank you, Robin. It looks like, and I can't pronounce the second name, but I will practice that. How are the pressure points seen in your chart by software or placed by the individual trader?
We don't use the pressure points are your visual cues. What I cover with you with pressure points. Who asked the question?
This was Ronald Rogers.
Ronald, pressure points are something that you observe with your eyes. Okay. We don't use a software or anything like that. It's really easy. We're just using swing structure, support and resistance, Bollinger Band expansion, overall market conditions. You just kind of add it up. And I say in the training, we can go with a minimum of 3 to 4 pressure points with Bollinger Band expansion being one of them. If we're lacking Bollinger Band expansion, we want maybe 4 or 5 pressure points that are in our favor, as long as there's not strong pressure opposing our direction. So it's something you do manually, and you do it fast. It only takes a second.
Question here from Tom C. Do you advise on all the settings, the EMAs, Bollinger setups, etc.?
Step by step, absolutely.
Okay. And here's a question from Donald Hawkins. I thought we got something for VIPs and 200 off. No, this is the tomorrow we're going to have on Wednesday we open to the general public for those people. The people who attend the webinar on Wednesday are going to get $100 off for $897. People who generally come to us afterwards or don't do it through outside means other than VIP or attending a webinar are going to buy it, and they're going to happily buy it, believe me, because I've run this internally also for my people, specifically at $997. So you as VIPs are getting the biggest, and I said it in my emails to you, and it's always the case. VIPs get the best price. You're getting it for $797. The price is good till midnight tonight. So you've got to, either this is for you, you're not. You've seen a lot of videos, you've seen a lot of the material, and you're getting a solid guarantee by Mark, and then of course I'm backing that. So if you don't believe in Mark yet, you got to believe in me, I hope. And so you've got a solid guarantee. If this is not everything that it appears to be for you, or it just doesn't fit you, then ask for a refund and you'll get one. We don't argue about that with people. There are plenty of you that are going to find this as amazing as I did when I first looked at it. So that's how the pricing scheme works. So you can wait as long as you want, but if you wait till the Thursday, or we may probably close it on Thursday because there's a limited number of these that we can do. It's going to be $997. So today till midnight, $797. Caught the end. Okay, what period moving averages are you using?
My thicker blue and black. The blue was a 200 EMA. The black was a 55, and then I throw a little 21 period moving average inside my Bollinger Bands, which has by default a 20 period in the middle. So there's a 20, 21, 55, and 200.
Mm-hmm. Yeah, I see Penny asked a similar question. It's exponential, as you just heard from the answer. Jim W., will you be trading the system live from me to follow along and see how you're using the system so I can learn?
What I do, here's my experience, Norm. When I do like live, like where we just sit there and breathe into the microphone and trade live, sometimes we run into stuff that's cool and fun and has a learning experience. Most of the time, it isn't effective. So what I do, instead of doing a live trading video or a live trading session, I record my trades live, and then I can edit down the downtime and turn a 2-hour session into a 15-minute hardcore educational video. I've just found it works best.
Excellent. Larry Cox noticed that you've used double Bollinger Bands with 2.0 and 1.5 deviations. Is there a big difference between 1.0 deviation and 1.5?
It's funny that he mentions that because I don't know where he would have seen that at, but it is true. A lot of times I'll go 2, 3.0, and 3.5. Sometimes I'll do a 1.5, and it's really just a visual thing, Larry, to especially when we're trading an extreme candle setup, which I didn't cover in detail here, but I like to know when price gets outside of my Bollinger Bands what deviation it's getting to, mostly for the purposes of scanning. Okay, so when I'm trading, I'm really just looking at my standard set of Bollinger Bands.
Excellent. Ronald Rogers says that you trade the S&P to downside. What was the symbol you were trading?
SPX.
SPX.
Yeah, and then
I'm sorry.
Then there's I think the OEX. Let's see, doesn't the OEX match that on a smaller scale?
Yes.
Yeah, so you could do the OEX as well, but that was the SPX.
Okay, James Arnold, I guess a brother of the comedian, said, I gather when the bands expand, you never really know which way they're going to break, to the upside or downside.
Good question, because that's a fact. The statement you just made is a fact. However, based on what price is doing in swing structure, and generally speaking, if Bollinger Bands expands and price has got a bunch of white candles headed to the upside, 80% of the time that's where it's going. But if we use swing structure with Bollinger Bands and support and resistance levels, you'll almost never make a mistake. So it is true, Bollinger Bands does not tell you where price is going, only that it's going. But by using all the steps together, we know exactly where price is going.
I do want to say something now that I'm involved in the course myself. That fact, the fact that I have always felt that when the Bollinger Band started to expand and the market was moving that direction, it was going to ride that band right up, as opposed to what you've taught me, and that it just means volatility is increasing, and that you better watch out both ways. You've covered a number of things in these presentations, but you have not even scratched the surface of a lot of the things that are just as important in Bollinger Bands. So I want to stress, for those people that really have a penchant for this, really understand, as I do, the power of momentum and how Bollinger Bands can give you an indication, do this. Spend them, put down the 797, make this happen, and inspect it. You get 60 days to look at this. Okay. I'm going to ask you a question from Beth, because I know you've got an answer, because you don't give stock answers. But this, I hate when this question comes up. I think it's a question that is more. I don't like a lot of the places this question comes from, but I'm going to give it to you anyway, because we're taking all the questions from Beth Kelly. So I want to pin this on Beth. Is your trading method? If your trading method is so successful, why are you spending time on selling your system and producing webinars?
That's a good question. It's a good question.
It's a lousy question, but go ahead and answer it.
Well, here, excuse me. Here's the deal. First of all, as far as my trading is concerned, I have a lot of free time on my hands. I refuse to sit in front of a computer screen all day and look at it. I used to do that. I used to enjoy it, but it got to a point where it was dreadful to me. Looking and searching and scanning. It actually got to a point where you're analyzing so much that you were paralyzed in your analysis. You couldn't find a good trade to save your life. These days, I'm trading, Sunday, I look at a couple of different commodity ETFs I like to trade. Monday and Tuesday, I kind of watch the open. I put on a few trades. I'll bet you I spend maybe 4 hours a week trading, and that's it. That's all. So I have a lot of extra time on my hands. I also have, based on all the articles I've written, a very big list of people that want my information, and I like to share it. When you learn something, it's kind of like the guy that is a karate expert, or maybe even the professor that's mastered psychology. Why do they like to teach? They want to share their information. They want to help people. Really, success. I'm reading a book right now, and it talks about your level of success will be achieved tenfold when you begin to impart your knowledge to help others. And so that's what I'm doing.
That's excellent. I'm sorry, I got to apologize to Beth. I didn't mean to come down on you there, Beth. It's probably me, because I've heard that question before. I'll tell you my answer to it
Well, it depends how she was asking it. If she was asking it sarcastically, then it's kind of mean. But if she was really sincere, that's a sincere answer.
That's the only reason I'm apologizing, because it could have been sincere. But I've actually heard the question, and to me, I read a book years ago. It was called Multiple Streams of Income. It was by that guy that did all the real estate stuff.
Rich Dad?
No, it was Robert Allen.
Okay.
He wrote a book called Multiple Streams of Income, and it occurred to me, I'm making money trading, so why can't I, people are always asking me, what do you have today, what do you do? Why can't I just put that in an orderly form? At least for me, it's about the mental and emotional issues. How do you stay so calm and why don't I put that in a form and develop a multiple stream of income? Why is, and that's not a bad thing. So I apologize to you, Beth, I guess, because I've seen the question before. I always hate to see it, so please accept my apology. Okay, Larry Cox asked, also you've mentioned using a 21 EMA when this means to, when the mean is set to 20. Is that that's somewhat confusing to me.
Right. Don't let it confuse you, Larry. When price reaches that level, just observe the two as a potential support or resistance level. Sometimes one will be completely ignored and the other one will be strong. And I've just oftentimes seen, for example, price come up to the mean, the 20, and appear to break through it and then come back down and fool me. And with that 20, with that extra moving average there, because it's actually a very important one, I'll oftentimes see when that 20 doesn't hold, that 21 does. So oftentimes I'll wait for both to, and a lot of times both of them are in line. You know, they're kind of crossing and price is right there. So don't let it confuse you. Just kind of look at it as a zone of support or resistance. Okay, a zone. That should clear that up for you.
Okay. Donna Giuliano asked, does
Hey,
this
Norm.
have... Yes.
I don't know if you saw Beth's answer there, but Beth actually signed up.
Oh, I love her.
Yeah, look at her
And
answer.
I'm eating crow on that one, so thank you. Thank you for saving my reputation. I'm such a jerk. You know, I listen to too much, what was psychiatrist on air that, what's her name? Not Dr. Ruth. I stopped listening to her. No, the other one. Anyway, Judge Jude, not Judge Jude, whatever. Anyway, the question from Donna is, does this have unlimited access for life? Or is there, I guess life is until you die or they die.
Well, here's the deal. Next week, we are putting up a new video serving format. Everything is downloadable. So I don't want to say, let's put it this way. For the next year, this will be active and busy with content and stuff and interaction and whatever you need. But beyond that, I highly recommend you download everything to a folder, burn it to a disk so you have it. So I don't want to say life because, but you know, a long time. But everything you get is downloadable so that you can have it for life.
Excellent. You know, I'm congratulating everybody that's signing up, and
there's so many questions that there's no. Sorry, that's my alarm.
Yeah, can you handle some of the questions? Can you see the questions on your own, Tom C?
Yeah, but they're moving so fast. I don't even.
Yeah.
I'm just gonna go. Let's see here. What time? Yeah, I'll go through some real quick.
Okay.
Mike says, what time do I pray?
I'll pick it up again. I'm noticing a lot of women are signing up.
Awesome.
Maybe was Bollinger? I never saw a picture of John Bollinger. Is he a good-looking guy? Or something? I know you're a good-looking guy. Is that?
He's not the cutest guy in the world.
Not that I'm being demeaning again. I'm being a schmuck. Okay.
Okay, so Ted says, are the 10 modules live, and what time do they start? Or what time do they? Okay, no, Ted, the 10 modules are up. They're videos. They're up now. Okay, so they're available now. You can watch them at 3 in the morning if you want. Mike says, what time frames do I permanently trade? Mike, I am, and I thought I covered that. I am a, maybe I didn't. I am a swing trader by nature. I like 1 to 3 day trades. I love 2-week trades. I'm not an intraday guy at all. But when I trade Forex, I am in and out the same day, but I lean towards swing trading. So Freddie says, or a musician we also love to teach. Exactly. Sorry for being late. Thank you very much, sir, for vital insight. Thank you, Ganesh. You're obviously using options. Do you cover the types in the course? James, look, I haven't covered options in the course, but we can certainly touch on topics that will help you. This is definitely not an options course per se, but you know, if you have questions, I'm here to help. I'll put it this way, guys: no emails will be ignored. You know, we want you to love the material, and wherever there's a gap in knowledge, if I find a common thread and a gap in information, I'm going to completely cover the topic. But I just want to be honest with you, James, and say this is not an options course. There's plenty of courses that you can take with options. But I'm certainly here, if you have questions about options, certainly here to help. Maybe I can touch on the topic a little bit, but I will not go in depth, okay? Also, some people say the best way of learning is by teaching. That's good, true, Rob. I think some of I will say, I probably grew as a trader dramatically in teaching, because you really have to look at the how, when, and why of what you're doing, so that what you're saying is you can give reasons why, right? Aren't they too close together to be useful, the 6 and the 20? Rob, they're not, and it's not a 6 and a 20. It's a 20 and a 21. because the 20 period is from the 20 period Bollinger Band and 2 standard deviations, and then the 21 is a Fibonacci. I like. You don't have to use it. I like it. Doesn't always. I will say probably 80% of my trades don't require it, if not 90. So guys, don't worry about that too much. It's not a big deal. The 2021 is a zone of support and resistance. Don't fixate on little things that aren't too important. Okay. Yeah, I got you, Rob. Well, it's actually the 20 and 21. Okay. Leonard says unable to process, something wrong with your site? Question mark, Norm. So Leonard's having a problem.
No, we're okay there. Leonard, I just thanked him, so he must have gotten through.
Okay.
I'll double check.
Is the 20 setting in Bollinger Bands? It's a simple moving average Bollinger Band setting, Joseph. So that would mean it's an SMA. So the Bollinger Bands are simple moving average Bollinger Bands. Donna says, great, thanks. Ronald says, is there a special offer code for taking the 797? No, Ronald, it's that link right there, thedisciplinetrader.com/BB-VIP. Norm put it in the chat box. You could just click on it. That was the last question, but let me go backwards because so many came in that we skipped so many. So let me just go back. Going on after the trade. Is there words? There access to watching current trade after trade. Okay. Let's see here. What is the shortest time period you recommend trading to fine-tune your entries? Great question, Rob, and it depends upon the instrument. What I do is, I'm generally 5 or 15. Let's talk about the Euro USD for a second. 5 or 15 minutes. But if I go to a 5-minute chart, which is often the case on a Forex pair, and price is choppy and blocky, and Bollinger Bands is a series of straight lines where there's straight down, straight sideways, straight up, straight down, straight, and they're just blocky, then I've got them. That time frame is not going to be effective. There has to be fluidity in the bands and fluidity in price action. So if you jump to a time frame that's choppy and blocky, then move to the next bigger time frame. And if you keep going bigger and it doesn't smooth out, then you're probably trading an instrument that does not have the volume sufficient enough to smooth out the price itself, Bollinger Bands, and the predictability you need to predict. Guys, remember this. There's 8,000 plus stocks, and there's hundreds and hundreds of underlying instruments around the globe. And we have platforms today that allow you you could sit in your underwear at your computer and trade anywhere on the planet pretty much. Why trade blocky, unfluid price action when you go trade something that is predictable and fluid and beautiful? And that's the only way to describe it, beautiful. When you got the fluidity and the predictability and swing structure that it does not violate itself, you get a low, lower low, double bottom, higher swing low, which is kind of a cup and handle pattern as price takes off to the upside, once it begins to take up those swing highs on expanding Bollinger Bands on all your pressure points, boom, you're into potentially a large trend that may last days, weeks, or months, depending upon the time frame you're trading. So when you get there, Ronald, I think it was Ronald that asked that question, just look at price, look at the Bollinger Bands, look for that fluidity. And Jackson asked, do I use a minute versus tick charts for your commodity futures trades? For my commodities futures, sorry guys, I got a little bit of a throat thing going on. For my commodities futures trades, Jackson, I'm trading ETFs right now. And I say right now because I bounce around. 3 months ago I was trading soybean meal futures exclusively because I was making like $3,000 a week on a $2,500 account. And it was beautiful. It was amazing. And then it died. And about 6 weeks, 7, 8 weeks later, it picked up again. And I developed this little method. I'll tell you how I did it. I simply, a friend of mine told me about it. I looked at it on a 5-minute chart. Maybe it was 15 minute, 5 or 15, probably 5-minute chart. And if you zoom out all the way on soybean meal futures, real enough so you can see the volume kind of bump in a cluster, and then you zoom into that volume and trade only the volume and only a breakout of that volume, it's amazing what you can do. So to answer your question, on the commodities, I'm trading ETFs. A lot of volume there, easier to trade, and I get the nice fluid predictability I'm looking for. let's see here. What about the trader who trades a small account with mini lots with $500 balance? Do you intend to offer for those guys a monthly paying plan, maybe $100 a month? Hans, great question. I think there is a payment plan, but I don't think it is $100 a month. Norm, that's
Yeah,
Hans.
a three-time.
Three-time payment.
They chop the payments up. It's a little bit of premium to it because there's bookwork on our part when there are premium payments, but essentially it's divided into three payments. The thing is that generally what I found is that putting it on a credit card really results in payments, a payment plan, and that you know, what the extra that we have to you know, add for the premium. I mean, we've already cut this, what used to be something closer to $2,000 down to $997. Then in the extra $997 here, it's cut down to a point where and I understand that everybody's in a different place, but take a look at the three play. That should probably suit you just fine. So hopefully you can take advantage of that.
And then Rajesh said, what's the Bollinger Band settings? That, Rajesh, is a 20 period, 2 standard deviations. Rob says, thanks for the comprehensive answer. Freddie says, will you recommend the use of stochastics? You can use stochastics, Freddie, like I use MACD, but I would only use stochastics for a divergence indicator. Chris says, thanks for the presentation, gentlemen. Leonard says, I'm in. Ron says, TF. I don't know what that means. Ron says, range charts. Thanks, Mark. Thank you, Joseph. How many of your trades do you add more indicators to than you have already explained? None, Donna. That is all I use, because everything should be really price-based on it. And, you know, I see people send me questions, and they've got these charts that are so covered with stuff, and they're zoomed into price, and they're like, what do you think's going to happen next? I'm like, there's no way in hell I would know what's going to happen next. I can't even see your chart, number one. Number two, you're zoomed in so close to where price is currently at that I can't see what's happened in the past, because what's happened in the past is really indicative of what's going to happen in the future. You know, I can't see support and resistance levels that might be significant, and it's those simple little things that really stump people up. So, answer your question, Donna. Everything you saw there is everything I use. Mark says, brilliant webinar, guys. Thank you, Mark, very much. Oh, range charts. Ron, you know, I don't even really know what a range chart is, so I've never used them. Alistair says, thanks, Mark. I'm in. Thank you, Alistair. Donna says, great. 55 200 SMA in lower time frames as well. Okay, it says use 2. Okay, 1. What settings? Okay, 2. Use 55 and 200 SMA in lower time frames as well. Yes, Rajesh, exactly. I don't change anything going down to a lower time frame. There's no reason to, because moving averages measure bars. So a 55 period moving average is 55 bars. So whether I go down to a 5-minute chart or a daily chart, I want to look at the bars, okay? And really, I'm really confused by people who change their settings on different time frames, because a simple moving average or an exponential is measuring bars. And if you're going to measure 20 bars on a daily chart, you're going to measure. Why not measure 20 bars on a 5-minute chart? It's 20. It's like using a percentage. It's all relative to the time frame. Joe says, good stuff. Thank you, Joe. Sumanth says, great presentation, Mark. Keep it up. How do you have stop loss? Good question. What's your MACD setting? Good question. MACD setting is 12.26.9. And great question, Sumanth. Can't believe no one asked that question. My stop loss is a visual one based on swing structure. So let's say I'm going long. I'm going to put my stop loss either below a strong resistance or support level or below a swing low if I'm going long. And then I'm going to look at that stop loss, and I'm going to look at my entry. Let's say it's $2. And I'm going to say, okay, I got a $2 stop, and I'm on a $40 stock. I'm good. So it's a visual one, but I do the math real quick to make sure. And let me add to that, because I'm an options guy when it comes to stocks. It's a visual one, okay? I've got a shortcut for options, but it's visual. But if I very often will see my entry and my stop is going to cause me to be down 50% if my stop gets hit. And people are like, whoa, 50%, that's unacceptable. It's not unacceptable. Okay, instead of allocating $1,000 to it and risking, you know, $200, why not allocate $400 to it? And now you're only risking $200. So it's all relative. A 50% loss is nothing unless you overtrade or over allocate to a trade. So keep it in mind. So To answer your question, my stop loss is a visual one based on the analysis of my chart, swing structure, and any support or resistance levels. But I always do the math because I need to know, guys, you need to know what's at risk. And it's a very good question. It's a very good point I want to make. Want to change your trading forever? When you're trading any instrument, instead of saying how much can I make, ask yourself how much am I willing to lose? This will keep you focused on two things. Number one, it'll keep you focused on the one thing you have control over, how much you lose. It'll also keep you focused in making sure that you allocate properly and that you actually do the math. So always ask yourself, how much am I willing to lose? And then by asking that question, you will take the right steps to make sure the trade is done properly. And that'll eliminate half your problems, guys, I promise. Let's see here. Was away from computer. Did you say this was good for day trading? As I like what you said about price action and not using a lot of indicators. Robert, it is good for day trading as long as there's fluidity, liquidity, and predictability on the chart. I don't know if you recall the beginning of the presentation where I talked about my damaging admission was that this only works in certain conditions. And what I spend a great portion of my time doing is showing you those conditions. Nobody will tell you that, but everything you trade only works in certain conditions. You've got to find predictable, unless you're trading news or some other type of trading, okay? You know, it's a different ballgame completely. We're doing a technical and fundamental approach to trading any kind of market, but it's based on fluidity on the chart, liquidity, and predictability. How do you set targets? Great question, Joe. Great question. My targets are based on talking about bullish for now, upper resistance levels and Fibonacci extensions, which I'll go into with you in the training. But you know, we're looking to reach the 161 and 261.8 Fibonacci extension levels. But we're completely cognizant of any hesitation in movement, where the hesitation is taking place, also the amount of money on the table. If I put $5,000 into a trade and it turns into $12,000 tomorrow, I'm out. I will never turn my back on 150% profit in a day and be an idiot, because big moves like that are often followed by either retracements or pausing periods where you watch time decay eat away your trade, even if you got 30 days left. That kind of big move and big profit, you got to take it off the table. Great answer, Mark. Thank you. I follow similar levels for options. Thank you, Samant. Great, says Regis. Volume just cut off. Sorry, Joe. I got a web page not available. Is the URL right, says David. Norm. And I think so. Norm, put that link in again. Make sure.
Yeah, I have it right there. Just threw it right in for you. I just want to stress to everybody that this pricing ends at midnight tonight. So, I mean, either you've seen a lot of this material, so I think you either have a good feeling or you don't have a good feeling. A lot of it is about feeling at this level. Until you really get into it. You've got the guarantee, so if you're even close, go ahead and do it and feel strong that if it's not for you, you can rescind that. So, but we make a guarantee like that because so very few will ask for that. I think once you see this material, that you're going to want to stick. I know you will. So just take a shot, and we're here for you.
Robert says, "What about high?" Great question, Robert. Robert Smith. How about high frequency trading systems? How do these affect your trading? Well, unfortunately, Robert, they affect everybody. But it's funny that you asked that, because my initial headline to this offer was, I forget what it said. It said, "Is this a trade or a trap?" And I didn't, because when I developed this system, it was really to combat high-frequency trading, because high-frequency trading is it's affecting everybody. But if you look for the clues that lead to a setup and you stack pressure points in your favor, markets cannot be manipulated to the extent that you can be fooled once you stack everything like this, once you get all the confluence that you need. Can we be tricked sometimes? Yeah. Is it always a trick? No, it's not always a trick. Sometimes it's just, the markets. But I think we're all affected by high-frequency trading, and this system is really spawned out of me trying to develop a way to avoid being trapped, because that's what's been taking place. Here's what the market makers And here's what's going on in the back end is old technical analysis tools, and you see them all the time. You see price move down, and just enough to take out stops where market makers know they're being set. And high frequency trading brings on a whole nother slew of things. But the very nature of what we do is going to eliminate a lot of the high frequency trading problems. Robert, great question. Joseph says, thanks, Mark. Robert, another Rob Hunt says, how can you be aware of current price action if you're only trading for 4 hours a week? How can I be aware of current price action? I don't know exactly what you mean, Rob, so try to reiterate that a little bit. Clear it up for me. Do you use hedging techniques when you get in the wrong direction sometimes? Sumant, sometimes I do, I'll hedge in one direction or the other, especially if I have a spread on or something of that nature. So yes, absolutely. I'm an options guy, so I do a lot of hedging. David says, thanks. D. Young says, do you travel overseas from 9/29 to 11/4? Can I get the VIP price when I return? Oh, he's traveling overseas. Good stuff, thanks. Norm D. Young, he's like the third question from the bottom there, just asked.
Yeah, I think well, you'll have just write me.
You'll have to email Norm.
Right, you write me. You'll get emails from me. Any emails you get about this, if you just respond to it. Anybody who knows this, if you respond, they come directly to me. And I'm like Mark. I answer too many of these. And Mark's much better at it. He's figured out that if you spend just a couple hours a day at one time instead of just checking in all the time like I do, but I still do it. So just email me your information and we'll try to work something out. But really, this is I can promise you the seat, but I mean I can't promise you the seat. Therefore, I can't promise you because if you wait till the end, just because we're going to be offering it to the public and there's a limit on how many we can take. So so just email me when you're ready, and we'll see if we can find some way to get you in. I usually can.
Okay, some of these are comments, so there's really about 2 more here. One of them says, do you follow Elliott Wave? And the answer to that question is, I'm very aware of Elliott Wave, Donald. I'm not an Elliottian. I'm not an expert at Elliott Wave. I'm very aware of 5-wave moves. I'm very aware of, I follow waves completely. Can I look at a 1-year daily chart of the S&P 500 or a Forex pair and pinpoint every ABC? No, I can't. But I know when wave 3 is present. I know when a 5-wave move is going to be followed by a pullback, and I know the basics of Elliott Wave, and basically, swing structure in and of itself. So I'm not an expert, but I do apply some basic Elliott Wave principles. And then Permershwar asks, please, how do I recognize the bullish and bearish traps by the market makers? And I'll just say Parma, because I don't want to say that right. Parma, by following price action exclusively and stacking pressure points in the way I've described in this webinar, we can eliminate 9 out of 10 traps. That's the best way to answer your question. And the last question is, I really missed this call. Is this recorded? And that's it. I think I answered them all.
I think we'll stop the recording right now.
Okay.
That answers the question if it's recording. And this way, at least rendering and we'll get the recording out to everybody. But know that, if you're going to refer this to somebody or pass this along to somebody, know that the pricing is only good till midnight.